That does not appear to be a driving concern right now when you look at the service sector, because things appear to be firing on all proverbial cylinders right now. In the latest period, service sector job growth close to 300,000, about 100,000 better than we thought would be the case. To LoanDepot Chairman and the CEO and founder, Anthony Hsieh. Anthony, a lot of people interpret this type of good news as, well, a mix of good and bad news. Interest rates go up on it, so bad news for those shopping for mortgages, but good news for the home industry that hopes that people pounce and buy, right?
Yeah. Interest rates are on sale. They have been for many, many years, and that was the sort of benefit coming out of a slow economic situation. But interest rates today, historically, is still fantastic. We're in the mid-4 range, not as good as high 3s, but certainly
you and I were
still
saying during the break, if you're young, this is all you know. If you're an old fart like me, you remember paying a heck of a lot more. But perspective is everything. Do they get antsy and say, well, I gotta move?
Absolutely.
Yeah.
So for those folks that are thinking about refinancing, taking cash out for home improvements, other matters, they've been thinking about it, and now interest rates are moving up, so their cost of credit is moving up, so certainly they're taking advantage of it before it moves up any further. And as far as home purchases, it has a direct correlation to your monthly payment. So higher interest rates means a higher debt load for a family, so there's absolutely some sort of sense of urgency when interest rates start to move up.
What if you want to go ahead and buy something, refinance something, and you can't get the money? Are banks still being tight?
Yeah, it's been 8-9 years post-financial crisis, and we have now Dodd-Frank and CFPB and all types of wonderful regulators that the industry have gotten accustomed to.
Consumer Financial Protection Board.
That's correct. But the reality is, this year the mortgage industry is expected to do about $1.7 trillion. And out of those fundings, 90% plus is still sort of backstopped by the U.S. government in Fannie, Freddie, FHA.
Is that right?
That's correct. So the liquidity has not yet returned to healthy levels.
Banks will only lend if Uncle Sam is backing it up.
That's correct. So the non-agency or non-government loans have not yet returned in a relevant way. So
Why?
we're certainly
afraid
hoping
lightning strikes twice, or they just want anything to do with it?
Some of that is just a scar tissue from the type of damage from 10 years ago, but some of it is also created by new regulation and the complexity of the new laws that are in effect today.
Then how do you feel then when you hear President Trump saying, all right, we got to untangle a lot of these laws that were caught up and regulations caught up in Dodd-Frank to encourage more lending? Do you ever worry that it could go back to Devilmaycare lending to people who have just a pulse kind of thing, you know, when it was crazy?
Yeah, absolutely. We're always concerned about it having not enough regulation. Certainly we came from that place 10 years ago, but
right.
If you just look at what's happening today, credit is returning to the consumers, but not so much on the mortgage sector. So we're going to have to balance that out, and hopefully the new administration understands that.
It's ultimately about jobs, right? If the economy is doing okay and jobs are returning and at the rate and at the salaries they were, because that's the dirty little secret on this recovery, is it lacks that part. Then all bets are off, right? Then we can, whether it's 90%, you know, federal backstop lending, that'll rule the day, right?
Yeah, we have a very strong housing market this year, forecasted at 1 point. It's really throughout the country, but if you look at certain markets such as Arizona currently, it's hot. There's houses that hit the market within 24 hours. You get half a dozen offers. So
Why is that so hot?
I think it's because of the lack of household formation, or actually the lack of new housing provided for household formation over the last 8 to 10 years. So there are certain markets that's starting to feel a little too good, but there is a shortage of housing in this country today, and the affordability is great because interest rates are still low, as you and I talked about, and incomes are strong, getting stronger. So all of those factors is accounting for a $1.2 trillion year this year in home purchases, so it's pretty strong.
You know, real quick, and you've been very patient with my idiotic questions, but I talked to a realtor friend of mine who was telling me, Neil, the problem still is appraisals, that we have a devil of a time getting an appraiser to properly value a property. So it's probably an overhang from, you know, just putting an outlandish price tag and confirming it from the go-go days, but the pendulum still has overswung and not swinging back. Is that right?
Well, this is the age of smartphones, but when it comes to appraisals, you still have to send out an appraiser physically to your home.
Right.
And the appraiser workforce is an aging workforce, and it's not a growing workforce. So there are certain areas, as we went through the refinance boom last year, appraisals were taking 8 to 12 weeks in certain parts of the country.
But are they erring on the side of being conservative still?
Yes, because they're looking at information from previous rather than information into the future or even present. So that continues to be a sticky point, and certainly regulation also has much of that they are going to have to figure out.
And real quickly, young people seeing that their parents were burned in the meltdown, are they still leery?
Not so much.
Okay.
Not so much.
All right. Anthony Hsieh, LoanDepot Chairman, is a big cheese there.